David, thank you for joining me here this morning. What are some strategies for investors to navigate the volatility and uncertainty presented by tariffs?
Sure. I think two key strategies. One is stay diversified here. We have seen, of course, people make big profits in the Mag 7 and so forth. But when you look really year to date, that's where all the losses have been, while other areas that people perhaps have taken a light touch within their portfolios, for example, international diversification, Europe stocks are up over 10%. So down 7 in Mag 7, up 10 in the European stocks. You could mitigate a lot of that down 7 if you included some of that. So that's one thing. Of course, always remember the fixed income component in your portfolio. We've seen, for example, the 10-year Treasury drop in yield about 40 basis points since the start of the year. Yields come down, that means prices go up. So that's another bulwark for your portfolio. I think the other key thing investors need to keep in mind is don't react too quickly. We have seen all sorts of instances just since the inauguration day of kind of flip-flopping on strategies. The tariffs against Canada and Mexico were on, then they were postponed for 30 days. Things can change very, very rapidly. And so I particularly those who have a investment horizon more than a nanosecond, be cautious about reacting to every single twist and turn in the headlines.
Well, there's this idea in the market that corporate tax cuts could be a little bit of a cushion to some of the selling that we are seeing off the back of those tariffs. Do you think that the market will react positively if and when we do get confirmation of those continued tax cuts, or is it not the same cushion that it was in 2018?
Well, since they're already in effect, and
Right.
it's merely an extension of the pre-existing corporate tax rates, I don't think you're going to get the same sort of bang for your buck as we did back in Trump 1.0. But nevertheless, it will be helpful. We're looking at other tax provisions, too, that could be useful for consumers. For example, perhaps the lifting of the SALT cap, which could help consumers in high tax states. And of course, there's other little things, on tips and so forth that could also help other consumers and so forth. But I don't think we're going to have a huge tailwind from the extension of the corporate tax cuts.
So what's your single best trade idea for the next year for investors who want to hedge against any risk from policy uncertainty?
Well, again, stay diversified. Certainly, dividend-paying stocks can make all the sense in the world here because those have lagged behind really for the last decade as people are ignoring yields 3, 4, 5% per year, which are growing with earnings as they've chased the non-dividend paying tech stocks. But if in fact this economy slows, and there's every reason to think that the policy volatility along with tariffs will cause a slowing in the economy, then interest rates continue to come down. And of course, the value of dividends, and of course, even more importantly, dividends are growing, is going to be worth that much more. So that's a general theme that I think investors could pursue.
And what about SMCI? This is one of your top picks. It's been a fascinating stock to monitor here. It's down about 30% in the last 5 days, but has seen a run up year to date here. What's your base case and your bull case for SMCI?
Yeah. So what I love about MCI is they're making some of the hardware and servers that are going to help further the AI revolution. In fact, NVIDIA at one of their investor conferences particularly cited SMCI Supermicro as an important partner as we build out the AI infrastructure here. But the stock, of course, had some issues. First of all, it got way up into the stratosphere at about 122. And then, of course, they had some accounting difficulties. They fired their auditors. There's a chance of delisting. That seems to be past them. In fact, they finally got that problem resolved. But the stock pulled back about 13% yesterday. It is up today, and as you know, a very ugly tape here. And what I like about Supermicro is the growth is fantastic. The debt is low. The accounting problems seem to be in the rearview mirror, and you're buying something that's trading about 12 times earnings instead of 12 times sales, which is pretty good in the AI environment.